Tax avoidance tricks for the mega wealthy uncovered. Welcome to Money Ocean, your go-to channel for all things finance, wealth building, and success stories. Today, we're diving deep into the world of taxes and uncovering some sneaky tricks used by the mega wealthy to avoid paying their fair share. Get ready to learn how to keep more of your hard-earned money in your pocket. Did you know that there's significant news on taxes? It has come to light that the wealthiest individuals in the United States are paying a negligible amount of federal income tax. Today, we will delve into several legitimate tax methods that have demonstrated their effectiveness. Once I finish, I will share with you the immediate steps you can take to lower your tax liability. First things first, let's discuss the significance of taxes and how they operate. When you work, the government considers the money you earn as your income before taxes. When deciding how much money to take, the government considers this. Your post-tax income refers to the amount of money left over after the deduction of taxes. That is why we are so focused on this. Even a small amount of savings can add up to a significant amount over time. For example, if you save $5,000 in taxes at the beginning of the year and invest that money, it may grow to about $35,000 in the next 25 years. Moving on to the tricks now. First, reduce your income. If you want to pay less tax, the easiest way to do is to produce less taxable income. Assuming you have regular work, you are probably accustomed to receiving payment, then paying taxes, and then spending the money that you have received. The situation is different, however, whether you have a tiny business, a side activity, or if you are a freelancer. You now receive payment, spend it, and then pay taxes on it. You have the ability to determine the amount of your money that is subject to taxation. This is advice. You should purchase items for your company. You name it, whether it be coaching, classes, or equipment, because they demonstrated to the Internal Revenue Service that these purchases can result in a reduction in the amount of taxes that you will be required to pay. So, if you are making $100,000 a year, you should spend some of that money in a strategic manner on items that will help your business expand. Your tax bill will decrease if you spend $40,000 on equipment or training. Number 2, reduce the amount of debt you have. Have you ever wondered how people like Jeff Bezos pay so little in taxes on their income? There is no other game but the debt game. They have invested a significant amount of money in various equities and assets. They borrow against such assets rather than cashing them out so that they can avoid paying taxes on the money. Expect for the extremely wealthy sandals. You may do it as well. Let's say you have $100,000 in stocks. Although you want $35,000, selling would result in a tax burden. As a result, you borrow $35,000 and use your stock as security for the loan. Because it is a loan, you are not required to pay taxes. Moreover, interest rates can be quite attractive. Put some of it toward your personal expenses, but put the rest into investments. If your returns are higher than the interest on the loan, you will have access to cash that is exempt from taxation if you pay off the loan with your profits. Number 3, deductions from taxes. Let's have a simple scenario. Meet Sarah, a remote worker living in the bustling metropolis of New York City. She loves the city's energy but isn't a fan of its sky-high rent prices. Fortunately, Sarah's job allows her to work from home, and she discovered a little-known tax benefit that helps take the sting out of her rent expenses. Every month, Sarah sets up shop in her cozy studio apartment. which serves as her dedicated workspace. Since she spends a significant portion of her time there working, she's able to claim a tax write-off for her studio expenses. This means she can deduct a portion of her rent from her taxes, ultimately saving her money. Let's break it down. Sarah's office occupies 25% of her apartment, and she pays $3,000 in rent each month. Thanks to the tax write-off for her workspace, she's able to save $750 in taxes every month. But that's not all. Sarah also tracks additional deductions like electricity, business lunches, and equipment, further maximizing her tax benefits. Now, do you get the concept about tax deductions? Let's move on to the next one. Number 4. Strategies for taxes. Ever ponder the reason for Warren Buffett's lower tax burden compared to his secretary? Your source of income is the most important factor to consider. You have a job that pays you $40,000 per year. Your take-home pay is $32,000 after taxes. Scenario 2. You make $40,000 annually from the sale of stock. You do not have to pay any taxes on it because it falls below a specified level. After accounting for taxes, you end up with a total of $40,000. Isn't that nice? But keep in mind that this is not only for the really wealthy. It is possible for anyone to play the tax game in a way that allows them to keep more of the money that they earn. Number 5. Property and real estate. Being a property owner means more than just appreciation. Additionally, it is a tax bonanza. At a rate of $24,000 per year, let's say you rent a house every year. However, deductions like mortgage interest and maintenance reduce your taxable rental income to $6,400. If you take into account depreciation, you might not have to pay any taxes on that income. Furthermore, when your property's value increases, you can use it as a leverage to purchase other real estate and continue to receive tax savings. For those who are trying to generate wealth, investing in real estate is not only a smart tax move, it is also a smart move for the wealthy. Number 6. Tax-deferred accounts. First, you should begin putting money away in tax-deferred accounts such as 401ks and IRAs. If you lower your taxable income, you will pay less tax now, and you will be able to see your savings grow tax-free until you reach retirement age. However, you should not believe that these accounts are only for senior citizens. In today's world, it is possible for anyone, regardless of their income level, to begin investing in their future. Using this method, you can easily protect your financial future while reducing the amount of tax you have to pay. So there you have it. The tax secrets that were reserved for the extremely wealthy are now available to you. Your tax payment can be reduced, and you can keep more of the money you've worked so hard to acquire if you plan ahead and use some common sense. Thanks for joining us on Money Ocean today. We hope you found our exploration of tax avoidance strategies insightful and empowering. Don't forget to subscribe for more tips on growing your wealth and achieving financial success. Until next time, keep riding the waves of prosperity.